Check. Yep. Yep. But probably not managed too well. Twice it got rejected right here. That might be the poor low at play. But we'll see. I mean, you would, based on Dalton teaching, odds are this should get taken out. So just quote unquote playing the odds, but maybe because of the poor low, those odds are decreased. And I should have bet when it was at halfback, like I was saying. Just didn't do it. And I was right when I was like, yeah, it doesn't make sense to be like, oh, wait for like a 3 point pullback because that's not what the trade was about. That's not what the play was about. But we got to talk about this because um, this was a winning trade. So we got to talk about why this was the winning trade and so we can replicate it. Talking about it in terms of poker helps a lot because it's not about poor lows and that shit. That's not how you win. Yes, correct. Yeah, well, what happened was inventory. Are you there still? Four oh one. Yeah, you're there. No, inventory got too long. Inventory definitely got too long, and I just didn't see it. It was definitely too short down here, but the fact that I think, I mean, it came a pretty long way from here to here. It was pretty greedy to expect it to get up here. So that was the problem there. And the fact he had a poor low, again, it didn't mean short as we saw, but what it meant was that this was just going to be a short covering rally here, and that wouldn't be enough to extend. It would just rally until all the shorts were squeezed out, and then it would, fall back down. That's what it did, and I just, you know, I really screwed up, really, really bad, but could have been a lot worse. I could have been short down here, two contracts, ended up losing like 4 points on two, and not even have gotten into this. So I wish you didn't leave because I want to talk about the entry of that trade. But what did you think about it? And most importantly, think about the fact that I got short when it showed us a poor low and it pulled back far from the poor low. And I was like, all right, time to get short. What did you think of that? I'll be right back.
Hey.
Andrew.
Yeah.
So, what'd you think about that?
All right. What do you mean?
Well, I guess I would
We
say.
thought Jay was excess. We thought, we thought Jay could have either been excess or there'd be fullback shorts in K. There was a lot of fullback guys right after it kind of bounced back.
Yeah.
And then I don't know what the hell happened after that.
Well, first I would say, after like a huge crazy spike like that down, we got. Yeah, it's probably bad tactics to think that it's just gonna go right back up. It's like after an extension, the market's gonna swing and back and fill, as it's called, before it. But I guess what I'm referring to more.
Well, buying was obviously the right move after that. After the news.
Well, I don't know.
Show me where you put your first buy, then your second buy, and your third buy. I want to see how early you were on them.
All right, hold on.
And if you even have like timestamps on them, like what if that like your first buy was 2:03 or something, and then 2:03 by that I mean 14:03 p.m. Oh, you got a little replay going.
Yep. God damn it. This is awful. I'm so angry. Actually, I'm not angry. I'm just very disappointed.
Oh, and you can do little sim trades here now. Let's see how God mode would be.
So I got up to 1,000.
Even with God mode, you probably won't even like it. You think you can make like 50 points trading God mode here with a single contract?
Yeah, because I know what it's going to do. But if I didn't, no, probably couldn't. All right.
Yeah.
All right. So my first buy was at 1,405 seconds. So 5 seconds after.
I'm not hanging up. It's just disconnected.
Yes, I know. It's probably my phone. If it happens one more time, we'll just call it.
Okay.
My first buy was at 1,405 seconds. So not even 5 seconds into the damn thing. So that means there was no patience. All right, let's just get to.
Yeah, we'll see how much it moved at 1,405 seconds. It probably barely even started.
And then my next one was 1,433 seconds. And then 14:01:19. So the
So
first.
a minute of sheer pain.
No, the exit was 14:04:44. So 3.5 minutes of
3 minutes of just insanity.
Although thinking back to it, it doesn't feel like it was 3 minutes.
No, it felt pretty quick. It's because it was so fun.
It was fun when the fun part was when you left and it was getting up there, but I didn't take the profit. No, it was fun when you were here and we were talking about it like the way you should be, in terms of fish and who's the sucker and betting and raising and stuff, thinking about it like that, like a strategic or a tactical.
Yeah.
That was fun. And what I wanted to say was, you notice that trade where I was short the two, like where I got short because of the poor low, it just shows you, but the reason we got out of it, or I got out of it, was, and then got long, was because I was like, wait a minute, I'm gonna pull back. Now I'm ready to sell it. Like you kind of like understand that's how you got to think about it. Those little things like poor lows, you can't rely on them to tell you what to do. That's just too level one thinking. And when you don't know what to do, that's what you start doing. All right, it's almost starting J period here.
Yeah. What time do you see from where? Because I just want to measure how long the delay is from your voice to the screen.
I see 13:59.
You're like 20 seconds ahead of me on this.
All right, hold on a second. I just paused it.
Oh, yeah, I just paused too.
All right, I'm going to start it now. So literally in less than a second, it spiked down 10 points. And that's when 1403. All right, I just bought it. I'll put a little line in to show where I got long.
Oh, the delay is actually a lot longer than that. You just paused it at 14:03 on my screen.
It's probably like a 5-second delay. You could see there was my first buy. All right, start it up.
Yeah.
All right. Here was my second buy.
I mean, at this point, it does look like you're like, oh, this is crazy excess here.
Yeah, but see, that's the thing.
It wasn't even close.
So that means that's the fish way of thinking. That's my opinion. What do you think about that? Do you agree?
I don't know. That's just I think it's just experience, knowing the kind of swings you can deal with after news and shit. On some other day, this kind of price movement that's the extreme, and that's the excess, and that's how quickly you should make a move. But on days like today,
Well, you know what I would say?
like immediately buying on a real aggressive price movement on another day would have been
Yeah.
good. Today, yeah, I don't know what I'm talking about.
Well, here's the thing. This day, you see this day here? I'm going to. All right, you see this day right there?
June 8th.
Yeah. That day spiked down and left an excess low in the gap and then came back up. And that started 1, 2, 3, 4, 5 days. All these days were low volume, overlapping value, wide points of control. You know, they weren't strong buying days. So it's unsurprising, I guess. The way to think about it is you need to understand that.
It's basically been coiling.
Yeah, you need to understand that all these days are at risk of getting taken out. You look at this, you say 1, 2, 3, 4, 5, 6. You say all these days are at risk of getting wiped out. Now it's tricky because again, you don't have a good high, but I think that's how you temper the urge to want to immediately buy.
Did J period break that gap, that June 8th gap? As in today's J period, it broke that gap.
Yeah, broke it.
That was when you made your third buy, when you hit that gap or something.
Yeah. I made my third buy when it went through the gap, which it's going to do very shortly. So yeah, I think you got to resist the urge to watch it and imagine how it could rally. You got to resist the urge to want to buy it. Because, like I said, 1, 2, 3, 4, 5, 6 days. Very, very weak structure. Those are all high risk of getting corrected, which is exactly what happened. So it cleaned all that out, flushed all that weak structure out. Now it's in the gap. This is do or die. This is do or die. Like if this was serious selling, more than just liquidation of 1, 2, 3, 4, 5, 6 week days, then it would not have returned back above the gap. And I would have went bust. I would have busted the account. But it came back up. And here, yep, here's my third buy right here. There's the third buy.
At 99 or something?
Yep, 99 and a half, something like that. And then for 3 minutes, it's just praying.
Yeah. at that, with that, when it's moved this much, I think getting long it's sickening, and literally anything can happen. But good spot. I mean, it wasn't a good spot to have everything right off the line, but good spot to go.
Yeah, you're right. Actually, I mean, maybe it was a good spot to go all in.
Yeah, maybe the probability of victory was like 90%.
Like
Which is so exceedingly high.
maybe your edge of being long, once it came all the way down here, went through the gap, and came back above, your edge was so good in that being long that it was, you want to go all in, but you obviously have to be in at a price where there's profit potential.
Yeah. I mean, the problem was everything was risk, and the trade was break even. Well, the trade was literally break even.
Yeah.
Everything was risk.
And everything was risk. So down here, yeah, you have the edge. Could have gotten long at 4,200, and so you got a little bit of an edge here. But then once it gets up here, that edge is gone.
And is this where you covered, or not covered? Yeah. This is where you sold.
Yeah, so I sold for break even. And then after that,
Oh yeah, then you got long again.
mm-hmm. This was my break even right about here. So we can take these off. Take all this shit off. Yep, all right, then I just got break even right now. All right, now I'm out of it for flat. Then it comes back down. And I get in at 41.98. So yeah, putting that edge to work of being long down here. The problem is all this rallying is just short covering.
How do you know?
Because every time it rallies, it drops back down. You get short covering. All right, this is where I made that 10-point trade. Now I was up 20 points right here. Should have just left.
You did that. No, you made that trade at like 3 o'clock.
No.
Oh yeah.
Yeah, I was up 20 points. Then literally a minute later, I got back in and lost it all.
Yeah, and you were down -7 or something.
Yeah.
Yeah, you were up 20.
So the edge is short on the rallies. All right, speed it up. But all you had was weak momentum traders pushing it lower. And you know that because they were never able to take out that initial low.
I mean, it's always weak traders. Everything's always weak traders. So
Yep.
like, it's not even like an important thing to look at anymore. I mean,
Well,
like, oh, it's just weak trading. All right, well, weak traders rather than 40 points.
yeah, I know, but the reason you keep saying that is because you just got to remember to think, what do weak traders do? And if it's only weak traders, if they're all running in one direction, then you can get into trouble. You're playing against other traders,
Yeah, I get that, and I like thinking about it that way.
Yeah, you have to think about it like that.
I'm kind of the opposite, making the opposite move.
You want to be long when the traders are too short and getting squeezed, and you want to be short when they're too long. So literally what happened here is they got too short because they kept selling every pullback. You got a big liquidation break, liquidating 1, 2, 3, 4, 5, 6 week, 6 of these days. And then they kept shorting every pullback, getting shorter and shorter and shorter. And then you had a short covering rally.
Right. Okay. I think I understand now why identifying when it's traders is important, because traders need to exit their position.
Yeah, traders are just there. They're all looking to make a buck,
Yeah, when it's the big orders, they're not flipping it so quick. So
Yeah, they're not thinking about profit in the day time frame. They're thinking about basically strategic positioning. So when it's going down, you want to just remember, all right, these are traders bringing it down. What are traders doing? What does it mean that traders are bringing it down? Now the thing is that traders they go with momentum. So that's why it could move from weak traders and still keep going, because the traders are gonna, because why? Because they look at like MACD or tick and all that stuff is negative, so they sell the market. The moving average is crossed over. The moving average is turned down. They sell the pullback to the moving average, And when the market gets too short, which is what happened here. Now you get the rally. And then think about all the people who who are like me, who, oh yeah, I'm not shorting it, I'm not shorting it, I'm not shorting it. It's gone up and then come down like 3 times already. And yes. And now after it's rallied back up, then they decide to get short. So it's not about the poor low. The poor low doesn't tell you what trade to put on, but you got to use it to understand what's going on in the market. It's market generated information. Andrew.
Yeah, I'm watching.
So now you're getting the short cover and rally. Now at half back, you're getting traders way, way late to the game, shorting into that. You know?
I don't know. Because all right, well, traders are shorting now, and then.
Well, no, now they're all covering. That's why it's squeezing.
Yeah.
Now you're getting the short cover and rally. Just think about how I was short 2 contracts here. Why was I short here? Because I had nothing going on. I was pissed off. I was on tilt. And I was like, all right, there's a poor low. Like, all right, fine. All right, finally now I'm ready to get short. Like, think about that mindset and why that ended up being why anyone who got short here got killed.
Yep. All right, good points.
All right. Well, like, why do you think this was a good trade?
All right, show me where you put your order in. Just put a little line on the screen or something.
Here, this white line right there. This was it. Remember I was short 2 contracts here?
All right. You were short, you scratched out of it, and then you almost immediately, you went long again, immediately.
Yeah.
You were just like, holy shit. Yep.
Yeah. So why do you think that one was good? Why do you think that ended up working out?
I don't know.
Well, what was the thought process behind getting long there?
That is just so so goddamn cheap compared to where it was.
No. Do you remember what I said
No.
when I was short? I was like, why the hell? Or I was like, oh, all right, now I'm going to get long. And you even said it so yourself. You're like, yeah, would you ever, earlier in the day, would you ever look down there and think of being short, like getting short?
Yeah. That actually was a good way to think about it. That's what I'm saying. Yeah, this price is actually way below where value should be. Yeah.
Well, I'll tell you the thought
Felt
process.
stupid. It just felt stupid. That's all.
Well, it felt stupid because the market had gotten so short already. It had been selling off for over an hour. And it had already pulled back and traded back down to the prior low and then pulled back again. And inventory had gotten short emotionally. So the reason I got long was because I realized, like, all right, this thing already pulled back and tried to extend lower and failed, and now I want to short it. And I just thought anyone who was getting short here in this market that was already had very short inventory, too short in the hands of weak traders, was at risk to getting squeezed out. That's why I was like, all right, got to get long. So my point is,
That can fuel it.
yeah, my point is, I didn't get long because of like a chart pattern. I got long because thinking about the other traders, thinking about what's happening in the market, and you use the market profile to help you get an idea of what's happening in the market, to help you get an idea that, all right, inventory is too short.
Yeah, I get that. But, I mean, you could say, oh, inventory is long compared to where the J period low was. Like, oh, look how much buying there was to get it all. You know, it was just going up and down and up and down. I couldn't even figure out which way, the inventory was.
Well, no, J went down, it came up, they sold back, it came up, K went down, and then L period came up to K, and it wasn't going back and forth. It was like J came down, pulled back, came down again, pulled back, then K came down. No, they kept selling those pullbacks, those swings. That's why I think inventory was getting very short, and it couldn't take out the J period low. There was no one left to sell down there. It got down to the J period low, and everybody covered their short, and it just.
Yeah.
And they covered their short by buying from people like me who got long at the wrong price, who were just like, oh my God.
Yeah, out of capital, out of emotional capital.
Yeah, and they just bail. They literally sell it at the low of the day.
You were probably thinking about doing that.
I was just thinking like, no, I was thinking, wow, I'm gonna have to refund the account. That's what I was thinking.
You didn't get mad or anything. That was good. You weren't, as it was happening, you weren't slamming. Once you got out, you would have slammed it. if you did.
No, I probably wouldn't have. On this day, I didn't slam it. I was just like,
You didn't feel any anger as it was wrecking you today. First.
yeah. And I did, and there were a lot of trades where I could have felt anger and I didn't. So I guess yeah, that's a good sign. I honestly, the fact that I didn't lose money today actually is
No, it's insanity. Yeah. These days have been like the bane of the way we used to trade for so long.
yeah,
Trading at Arcam, these kinds of days just absolutely destroy your soul. And you actually made money.
yeah.
And the great part was that you made money almost after you got wrecked, and you stayed in there. That was so good. You just kept trading.
Yeah, and it almost ended up being a home run of a day. I was up at 20 points, but it just wasn't on that trade. See, just here, watch this. This is after you left. This is what I'm saying. Like the L period got up to that line that says low of day right there. And in the back of my head, I was like, we have a poor low down here. This makes, this increases the risk of being long, but I just wanted it to go higher, I wanted it to come back up here. So I just, I didn't play the odds. The odds were.
Yeah, you could have just been like, oh, there's no excess on the downside. How the fuck am I supposed to get long?
Well, yes, I could have said that.
Well, yeah,
Or even worse, oh, there's no excess to the downside. I got to get short. But the way you're able to get long is when you understand that no excess on the downside. It just tells you something about who's in the market and what what the state of the market is. So even though there was a poor low, I knew inventory was emotionally very short. That's why I thought you had an edge to be long the market. So even when there's a poor low, you can be long because what it tells you is that, well, you had the poor low, but it came back up, and like broke back above like these supports, like this green line here. And I was like, all right, there's a poor low, but I know that inventory is very short, and I know they're at risk of getting squeezed. And even though there's a poor low, a short covering rally can go a long way, which it ended up doing. But the problem is, it's just a short covering rally. And unless you get, buyers piling on after the short covering dries up, it's going to come back down, which is exactly what it did. It just came right back down to the middle. Pretty much finished at half back, came right back to half back. And I could have understood that because of the poor low and because of, just how emotional this is, that there was risk of it getting too long up here, of losing your edge being long up here. I didn't want that. I wanted to fucking get up here. Like that's something that could have gotten me enraged, but it didn't. Which is also good.
Yeah, it's awesome.
Like here, I was thinking, oh, maybe I should sell. I was like, all right, let me wait and see. And I waited and saw, and it went through. So, so obviously, like, when it gets to the next one, you're going to be like, all right, let me wait and see. It's another week high. But I didn't pull the winning card on that one. You're like, all right, weak high. Like, oh, I should probably sell, but let me wait and see. Let me see. It's a weak high. It can go through. And that was as high as it got.
All right.
All right, so so going forward, you got you got a poor low, right? Poor low on the day. You have so non-excess low, 4190.25. See that?
See what?
Non-excess low.
Yeah, obviously.
Non-excess rally high. Shit. That got crazy. All right, there we go. Non-excess rally high. So the LM high. And so basically, the range tomorrow is going to be this non-excess rally high to this non-excess low. If you break the non-excess low, you got to get to this double distribution merge line here. See that?
Yeah.
And then from there, you get to this low of day down here. So that's the preparation on the downside. I mean, again, this was a weak market right here. So, and then if you break this, you know, you've and if you look at the weekly bars here also, it broke through last week, but didn't close below. You know, it wasn't. No, it's still within last week, so this could just be a pullback on the weekly bars. The monthly bars are still unchanged. All that, nothing changed in the monthly. Daily, you got this, just this break, this flush down, whoosh, and just broke all these days, all these weak POS days, took them all out. So now the question is, what are they going to do tomorrow? They broke it down, got too short, rallied up, short covering rally, and then closed back in the center here. So I'd say inventory is probably kind of balanced out. And you got a wide range, and you're probably going to be within this tomorrow. Then the market will come into balance, then you have balance rules again. So the big thing about today was understanding you had these, I didn't even realize this until now, but you had these 1, 2, 3, 4, 5, 6, 7, 8 just weak overlapping value, you know, truncated, wide points of control weekdays where inventory just got so long, and all it took was one catalyst and they all just flushed out in a matter of like 4 minutes in that J period bar. That there was always that risk of happening. So that was just, if all you're doing is coming in today and looking at like poor highs and weak highs, you're completely missing this, which tells you about the market, information about the market right here, about the strength of the market. You understand that part?
Yep.
So what do you think gives, what do you think gives you an edge in trading? Huh?
I don't know. I can't think anymore.
I know,
I'm not talking trading today.
I know it's a bitch, but it's important stuff.
Okay, the edge comes from understanding the market, understanding. Well, by reading the charts to see what kind of. Well, basically, what I've gathered from today is finding inventory, but deciding whether or not it's long or short.
Yeah, I think understanding inventory conditions is insanely important.
Totally agree.
And you got to understand, before we go, I just need to make sure you understand what I mean when I talk about these days here. Starting here with this green rectangle. Like the market on June 4th was, 4,200, right? Got up to 4,250 over the course of 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And during that time, they were like, oh, new all-time high in the market. So you'd think, the market was strong or whatever, but does this look like strong buying? Where you have all this overlap?
I guess not.
Yep. That's correct.
Yeah, I guess would strong buying be gapping up or something?
Well, I guess what I would say is like on this daily chart, like look at these bars here. You have high. They're not like overlapping. You have like higher value, as opposed to overlapping value or overlapping high.
They do look different. Yeah.
This day price went up, but none of these days had higher value. Every single day was at best overlapping to higher value. So
So people were bound to start getting short. Or I mean, at least selling.
well, the common pattern in the market is inventory to get too long, and then liquidate. Too long, liquidate. Does it in the day time frame, and it also does it in, the intermediate time frame. 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day. Inventory's long, and then something happens and liquidate. So yeah, do you see how inventory got long in the daily bars versus, not just in the day time frame?
Yeah.
Like that's the only way I can explain a 30, almost 40 point, a 38 point liquidation break. All right. Anything else you can think about?
No.
You think you'll come in? You're coming here tomorrow?
I don't.
All right. All right. It's good.
Maybe. I don't know. I gotta do crap in the morning at least.
Yeah. Well.
Or we could do a mock week next week.
Yeah. Not a bad idea to do it next week.
We'd have to do it Monday or something then.
Monday versus Friday.
Yeah.
I guess it depends. If Dad's here on Friday, or if he comes in Monday. Like if he comes in Monday, then that might be a good day to do a Mockley.
Yeah, I agree.
All right. Talk to you tomorrow.
Yep. All right.
Bye.
You ever wonder what actors and actresses do when they have to get shit really fast for a movie? Because I can promise